In this short video, I'm going to share with you how to buy your first buy-to-let property. Hi, my name is Mark Lloyd. I'm co-founder of Property Master Academy and been an investor now since 2005. One of the very first things you should do as a property investor is check your credit score. Now, if you're not sure what that is or where to go, there are a number of companies that offer credit referencing, but there is one that covers all the main 4 agencies, and that's called Check My File. You need to subscribe to that. That will cost you $14.99 a month. Now, why do you need it? Well, your credit score as a property investor is one of the most important things when it comes to financing, because when you try to get a mortgage or any other kind of financing as a property investor, it's your credit score they're going to look at. So they want to make sure you've got a good credit score. Now, the credit scores vary depending on the agency. There could be, for example, 999, could be 600. It really does depend on the agency that's being used. And each bank uses a different agency, so you're never 100% sure which one they're going to use. So you need to subscribe to something like Check My File, which covers all the 4 main credit reference agencies. Now, if you've not got any credit previously, then you need to get some. Because what a lender wants to know when they look at your credit score and they look at your credit file is that you are good for credit. You've got a history of not only borrowing, but paying back that money. So if you don't currently have any kind of debt whatsoever, I would suggest getting yourself a credit card. Take a small one out, it doesn't have to be a high balance, but make sure you use it. Use it for groceries, use it for petrol, whatever you want to use it for, and then do not pay off the full amount each month. Pay off a proportion of it so that the bank is actually earning some money from you. They're getting some interest out of it. And that again shows to a lender that they can earn some money out of you. You're good at paying back your credit, and that will help your credit score as well. Because if you've not previously had credit, chances are your credit score might be quite low anyway. So we need to get that up. Now, if your credit score is below 500, you're going to find it very, very difficult to get a mortgage. In fact, if it's even below 700, that will still be rather difficult as well. So you need to get your credit score up, and one of those ways of doing that is to get yourself a credit card and make sure you're paying it off regularly, more than the minimum amount each month. So that's the first stage. Now we need to look at where is your deposit coming from. For a buy-to-let mortgage, that's on average going to be 25%. So on a buy-to-let property worth £100,000, you're going to need to find £25,000 just as the deposit for that particular property. So you've checked your credit score, you've got the money for the deposit. Now you need to talk to a mortgage broker just to check that you are mortgageable, that you can actually get a mortgage. So have a chat with a mortgage broker, and you really want to find one that specialises in dealing with buy-to-let investors, the investor market, because they'll have a much broader knowledge of what is available to you than a broker that only deals in the residential market. So a broker who is specialised in dealing with investors is the best option to have. And some of those charge a fee. I would allow up to about £500 for that, and some don't charge a fee. There's no rhyme or reason behind it, so pick and choose with someone that you like and you're going to be able to work with. Now, just mention the broker fee. There are some other hidden costs that you might not think of. So, for example, you're going to have to pay a solicitor to deal with the transaction for you. Solicitors' costs will vary depending on where you are in the country, but to purchase an average buy-to-let property, solicitors' fees, including the disbursements, are going to be around about £1,500. And then there's stamp duty. Now, as an investor, you pay a 3% premium on top of what the normal residential rates are. So if this is your first buy-to-let property and you already own another property, then you're going to pay at least 3% stamp duty. And then lastly, if you have got this property through a property sourcer, then of course you've got their fee to pay as well. And that could be from £3,000 to £4,000, £5,000, £6,000, £7,000, depending on, again, on the value of the property or where you are in the country. So don't forget about all these hidden costs, because they affect your overall return on investment. So next, really, it's understanding the numbers. What is it the rental going to be? What's the likely purchase price going to be? And what's your return on capital employed? Return on capital employed is the net rental income divided by the amount of capital you've got in that project times by 100 to give you the percentage. Now, if you're starting out, I would aim for at least 10% As you become more experienced, those figures will go higher. But starting at 10% return on your money, let's face it, is far, far better than having your money in the bank. So now we've got all those things in place, we now want to find the property. Now there are plenty of places to look for properties. You've got online portals such as Rightmove, Zoopla, On the Market, For Sale by Owner, plenty of them to look at. But also there's plenty of off-market opportunities as well. So talk to, for example, letting agents. Why? Well, letting agents deal with landlords. And if someone's going to be selling a property as a landlord, the chances are they're going to speak to the letting agent first because they may have to do something with the tenancy that's in the property. So look at other off-market opportunities. Facebook is another good one, but also letters, leaflets, all those kind of marketing things you need to do to try and attract deals to you. So the next thing you want to do is put your offer in. Now, whether you're dealing directly with a vendor or dealing through an estate agent will vary how you're going to actually phrase that. If you're dealing with an estate agent, you obviously want to try and get the property at a reasonable rate, don't you? Because to make the investment viable, subject to what your figures show, it's generally going to be below the current valuation of that property. Now, estate agents can help you, but it's going to take time when you're starting out because you've not yet built any rapport, you've not bought a property through them, so they're a little bit skeptical of dealing with you. So when you're putting in your first offer, ask for their help. Excuse me, Mr. Estate Agent, what do you think the minimum the vendor would accept? And see what they come back with. If they're not helpful, chance it with a few offers. So on a £100,000 property, for example, if I was to put an offer in of £70,000, what do you think the vendor would say? And creep up 75, 80, until you get to that figure that you don't want to go any higher. Never, ever go any higher than the predetermined figure you've already worked out. If you're dealing with a vendor directly, that's a slightly different conversation because you'll have a lot more information to hand and something I will cover in another video. So you've put your offer in. Let's assume that's now been accepted. So the estate agent is going to want a few things off you. They're going to want some proof of ID, so passport, utility bill, and proof of funds, proof of deposit in particular, and if you haven't yet got it, a mortgage agreement in principle. You can get a mortgage agreement in principle very, very quickly from a good mortgage broker, usually within a few hours, but certainly within 24 hours. They'll also want your solicitor details. Once they've got all that, the estate agent issues a memorandum of sale which goes to your solicitor and it goes to the vendor solicitor, and that starts the whole ball rolling. Then it's down to the professionals to sort it out for you. So the solicitor primarily, but obviously your mortgage broker is going to be pushing through that mortgage, getting the survey instructed, so on. And there you go. That's the process for buying your first buy-to-let property, and then you just got to repeat the process. I hope you found this video useful. If you have, please hit the subscribe button and also the notification bell so you get notified as and when we introduce new videos. There's also some videos appearing on your screen right now which will help you progress in your property journey. Thanks for listening.